Hi, and welcome everyone to our second Lean Thinking webinar in celebration of Manufacturing Month. My name is Nancy Patton, and I'll be your moderator for today. Before we dive into our topic, we have a few housekeeping notes that I'd like to cover. First, everyone on the line has been muted to limit disruptions. If you have any questions, you're welcome to share them with us in that questions feature box of your GoToWebinar control panel. And if we have time at the end, we'll go over those questions together, but if not, we'll follow up with you after the webinar. Today's conversation is being recorded, and you'll receive a link to rewatch it along with some additional resources in your email tomorrow. And upon leaving the webinar today, you'll be prompted to complete a very short survey. We'd love to get all your feedback and let us know what other topics you'd like us to cover in the future. Today we have Scott Peper from Mobilization Funding along with Saltmarsh's own Suzanne Cox to have a conversation on streamlining your company's cash flows. Suzanne began her career in 2003, and she regularly speaks at seminars to share her expertise on accounting-related topics related to construction and, of course, manufacturing. Scott is CEO and co-founder of Mobilization Funding, which was founded in 2013 with the purpose to help people and grow businesses. They specialize in contract and purchase financing orders, and all of this for manufacturers and constructions alike. I'm going to pass it over to Suzanne to get us started.
Perfect.
Hi, guys. Well, as you know, we're in the middle of a lean thinking series this month in celebration of Manufacturing Month. And that is our theme for the month. And so this specific webinar is going to be on how can cash flow and management of your cash flow of your company help in leaning out your organization. You know, that's a lot of 2020 and now most of 2021, where people have spent a lot of time reevaluating their business, reevaluating the way they do business. A lot of our manufacturers are even restructuring the way that their, floor is, set up and the way in which they're making their product, and what expenses can they lean out, and how can they be more efficient in today's market. And so we're going to be really focused on the topic of cash flow today and how you can lean out your cash flow, generally speaking. And so we've got Scott here today. I'm going to be asking him a few questions, and feel free to put your questions in chat, like Nancy said, and we will be following up with any of those after. So Scott, tell me how effective cash flow management will help create a lean organization.
No problem. Well, first of all, thank you very much, Suzanne. I appreciate the intro. Based on manufacturing, for us, we work with a lot of different clients, specifically in manufacturing. The thing that we see the most for cash flow management, getting lean, is really what kind of expenses are driving your organization. And then, I guess, by definition, to get lean, how do you make those expenses go as far into the revenue model as you possibly can? That leans them out. So really, having good cash flow helps you drive payroll efficiency, raw material efficiency, assembly, depending on what type of manufacturing you're in. And we work with some that are just assembly manufacturers, others that are kind of pick and pack, and others that are bringing in several raw materials, putting them all together into a finished good, and assembling them and packing them. And then I think so understanding what your drivers of the major expense items are and where you can go over or under can significantly impact your cash flow, not only mostly in payroll, but also in when you buy your raw materials. If you have the cash, first of all, cash is never an issue. You can buy your raw goods in the most efficient manner, which should drive your cost down. If cash is an issue, when do you buy those raw goods? In what segments? In what kind of increments? And then how do you most efficiently ship them if they're coming into you? So there's a lot of parameters, but really, I would break it down and identify your key expenses, including labor, and how do you manage those to the most efficient manner using the cash that you have on hand and making sure you build those models out.
Yeah, payroll is in some businesses, more than 50% of their expenses. And so when you're talking about what's the biggest area to lean out, payroll obviously skyrockets to the top. Labor right now, as everyone knows and probably experiences, it's a tight market and people are demanding more money. And so cash flow from a payroll perspective is very important. And as I mentioned a second ago, some of our manufacturers are redoing you know, they're using different technology and streamlining their processes in order to be able to lean out on the number of heads that they need to have, which is, of course, a way to lean out payroll. So, so how does the cash flow cycle work in manufacturing? Can you give us an example of, like, you know, you mentioned revenue cycle, you know, how does that tie in?
Yeah, you know, one cool thing I just want to touch on with payroll, I think is interesting, and a client brought this up to me. The conventional wisdom says, how do I get as lean as possible in payroll? And the thought would be, oh, well, how can I do as much as possible with as little as people as possible? Therefore, my payroll shrinks. But you know, it's not necessarily that way, because not every single human being is the same. Some are more efficient than others. So coming up with efficiency goals, or how you compensate those employees, coming up with new programs, incentives, not just compensation incentives, but production incentives. One cool story that I heard, and this was an assembly line, like more of a pick and pack type customer of ours. They changed the way that they work to basically 45 minutes on, 15 minutes off. And what they found was that in those 45 minutes, those employees were like astronomically more effective than they were in a normal 2-hour period of time. So even though they only worked 90 minutes of that 2-hour period, they were just as effective and more efficient with less errors and mistakes. So that drove higher efficiencies. So there's a lot of creative ways to think through. It doesn't just mean, for the folks that are listening, yeah, it doesn't mean cutting heads, yeah, because I think sometimes it means hiring more people to figure out how to use the labor force you have in the most effective manner. So maybe it's one leader that looks at what you have and does an analysis and really thinks about it in a different manner. Someone maybe from outside your industry and asks questions of why you do it this way, why aren't you doing it this way, and really dig deep into what you're doing. So I think it's good to point that out, because it doesn't mean
that's a great point, because in our industry, not manufacturing, obviously, you know, professional services, but we make more money when we have more people, because we're able to leverage the people at higher levels. And so that's a really great point to make for manufacturing as well, is look at your model individually, and can you do something like, I love that 45 on, 15 off, you know, can you leverage your people better to get more production out of them, which obviously results in better, higher profits. So.
Yep, absolutely. But to answer your question about how cash flow cycles work in manufacturing, you know, I have a concept we call the revenue cycle, and those aren't two words I created. But what I mean by revenue cycle is every company has their own revenue cycle, and the beginning of that revenue cycle is you have an identified set of cash or revenue that's going to come to you either in the form of a purchase order, a contract for service, an order, whatever it may be. And then the end of that revenue cycle is when you actually invoice your customer and you actually receive the money for it. That could be 1 week. It could be, if you're in a restaurant, that actually is within an hour. You know, if you're a fast food restaurant, it might be within 5 minutes. But in a manufacturing facility, it might be more like 30 or 60 or 90 or days or longer. And so understanding the cash of your revenue cycle is really key. And what I mean by that is you need to know, if you take one average order that you normally get, and just to use round numbers, let's say it's a $100,000 order. Well, what does it take to get that $100,000 order through your system? And what are the costs associated to it? When do you incur the cash needs? If you have a $100,000 order, do you incur, and let's say you have a 30% margin. So for every 100,000 in revenue, it costs you $70,000. Well, do you incur that $70,000 on day one of the revenue cycle? Meaning you order a finished good and it takes 60 days to get it in-house, and then you invoice and get paid? Or does that 70 go out as maybe 30,000 in material, another 10,000 in payroll for a couple weeks, and then it goes somewhere else for another week and comes back to you, and there's freight? I mean, when is the cash needs of that $70,000 in that example? If you really, really understand that by purchase order, and then you overlay those purchase orders by customer and by customer into an overall business model, you'll really understand what your cash needs are as it relates to your revenue cycle. And you'll see the opportunities and the challenges to what your cash needs are and how you can impact them and make some good decisions. And that's one thing I always suggest to customers of ours or other business owners, to just really get a good understanding of that and see it on paper. And you'll know, as an owner of your business or a manager or a leader, you'll see what leverage you need to pull and where the pain points are.
So really good points there. You know, we work with a lot of clients that don't track cash flow, you know, maybe as meticulously as, you know, some other people might. So how do you recommend to your clients, you know, how should they be tracking cash flow? You know, how do you help them? Do you help them as part of what you do, you know, learn how to, you know, spreadsheets or, you know, how to track cash flow?
Yeah, so one thing I would say is I think a good 13-week cash flow model that you can certainly work with your CPA or your controller or your CFO on to build, that really helps you from an overall corporate standpoint. There's also nothing about that you can't do for an individual PO or an individual customer as well. You can really see how that needs to be. What we specifically do as part of our loan program, and it started out, frankly, we did it for ourselves so we could figure out how to make a loan. But what we realized is that's actually our best product. Our best product is our cash flow tool. Sure, we lend money and that's great, and that's why people come to us. But the cash flow tool that we created, that we utilize to help make a loan in a manner in which the customer needs it and can use it for what their purposes are, is really what our best product is. And then we just facilitate that through a loan program. So what we do is we take that revenue cycle and exactly what I said to do before, we ask, okay, you have a $100,000 PO or $1 million or whatever your number is. You have what costs are associated to it? What do you need? And when between day 0 and day whatever your revenue cycle ends, do you incur those? And then what we do is we basically see where the cash flow shortages are. You're short on cash for the first 30 days for these 3 invoices to your suppliers or your payroll. And then we overlay our loan product, our loan dollars in tranches or whatever into where those cash flow shortages are, such that they have the cash they need when they need it to materialize that revenue in the most efficient manner. And then that allows them to start pulling levers like ordering materials in bulk to maybe get a discount, or maybe paying their supplier today because it helps them jump in front of the line to get the products they need when they might be delayed more if they were asking for terms. So those are that's exactly what we do. And then when they're paid back from their customer is when we would ultimately get paid. So then we look at it, how that impacts the margin of the project using our loan and whatever the cost of that loan is as it relates to the actual purchase order or contract.
Right. So like I said, a lot of people struggle with, you know, exactly how to prepare a cash flow. So that's great advice. And it sounds like a great tool. So if you're interested in that tool, I think it's on your website, right, Scott? If somebody wanted to download that tool,
Yep.
It sounds fantastic. So speaking of, you know, cash flow tools and things like that, we're accountants and we love metrics. And so part of what we do is analyze you know, KPIs. So we look at a company and we say, oh, okay, their gross margin's this, or their days to collect money is X and their days to pay money is Y, and you know, these types of metrics. Are there any sort of metrics that you specifically look at or that owners and financial executives in the company should be paying attention to, and what are those? Could you talk about those real quick?
Yeah, the most important one that we always look at, well, it's not most important, but one that we think is very important but gets left out a lot is what the overhead contribution margin is to each project per PO. And what I mean by that
now you're speaking my language.
Yeah, okay. Well, hopefully everybody understands this, but if not, I'll explain at least in my layman's terms what it means to me. You know, if you have again, I'll use that same example. You have a $100,000 order. You have to order $50,000 worth of material. You put $20,000 worth of labor on top of it, and you can produce a $100,000 invoice. So your gross margin is $30,000 or 30%. Well, you also have overhead in your business. You have employees that aren't going to make that product. You have professional services that you need to pay. You have insurance. You have rent or debt service. What are those total dollars cost you on a monthly or annual basis? And what percentage of that total dollar value, what percentage of that is your revenue? Because in a perfect world, if you do $1 million in sales and you have $100,000 of overhead, well then 10% of every revenue dollar you create is going to be an expense, 10 cents. So in this particular example, if you had a $100,000 PO and $70,000 of hard costs, labor and raw materials, you also have $10,000 attributed to that invoice for overhead. So you really have a net margin of $20,000 or 20%. And we look at that because the reality is those overhead payments, they're coming monthly or weekly, regardless of what your revenue cycle is. And so those are the things that can put real strain on a business. If a business thinks it has a 15% margin and they haven't allocated any overhead to it, and all of a sudden they have a 15% overhead margin, and they're wondering why they don't have any cash and the profit at the end of the year isn't there. That's it right there. Those are the dollars. So you either have to increase sales or lower your costs, or increase your price or lower your costs. So those are the things that
sometimes, sorry to interrupt, but sometimes you'll see lenders that look at your overhead and say, hey, you've got to have 6 months of cash in the bank to cover this overhead, because as you said, they're fixed costs. That's what we call fixed costs. If they don't go up or down, they're always going to be the same. Rent, insurance, those types of things, those are fixed costs and they're not going anywhere. So for you to be able to stay in business for 6 more months, you've got to have the money to cover those, fixed expenses. So just breaking in there real quick from an overhead standpoint, it's probably, like you said, more important than people give it credit for. So
yeah, it's usually it's causing some part of the pain. If you're in cash pain, overhead is probably a factor that is real or hasn't been attributed enough to. And it's usually not, oh, I didn't count my salary as the owner or a couple of the administrator staff that aren't associated with a specific project. It might be debt service. You buy a piece of equipment, or you have debt on the business, or maybe you started with an SBA loan. Debt service can be a pretty big monthly commitment that, if not accounted for in your bidding sheets or your pricing metrics, then you can certainly feel that pain. The other areas we look for that are important, I think, are metric-wise, are what is your gross margin, and more importantly, how are you calculating your gross margin? Because I want to know what you're counting in that to really know what your true
Are you including overhead?
Yeah. What labor are you allocating? My hourly rate is $15 an hour for my team, right? But if you're not counting, if you're running at 25% overtime and you're not attributing that in your bidding process, or maybe you're counting for that on your financial side of the business, but your pricing metrics or the folks that are bidding work or pricing work aren't accounting for the fact that you actually are running at 25% overhead, maybe because there's labor shortages, or maybe because you don't have enough employees right now, things that are real now, that's a different hourly rate that you need to calculate into your pricing, or at least be knowledgeable about it, so it's not jumping out at you, or it's not a surprise. And then we also look at what your payment terms are with your customers, your suppliers. Not only, I think you nailed it on the head there, Susan, when you said the DSOs daily, how long does it take for you to get paid? You have 30-day terms, but is it really closer to 45? I have a friend who sells quite a bit of tens of millions of dollars to Home Depot. They have a 2%, it's 2% 10 days or net 30, and they get paid in 60 days, and Home Depot takes a 2% discount. So like, what's on your sheet and what's reality are two totally different things. So I think those are the things to really pay attention to that we look at. Those are the kind of key drivers and metrics.
Yeah, for sure. So you mentioned earlier about supply chain. So for example, if you are a manufacturer that just buys inventory when you need it, you may have been affected, recently with the pandemic and shipping issues, and the whole Gulf is full of ships with all your stuff on it, so you may not have been able to get it. So some manufacturers are pivoting and overbuying things to have them in stock so that they can still produce their goods. And so that obviously causes a huge cash crunch, because now they're overbuying things for perhaps orders that they haven't even gotten yet. Are you seeing that in your client base? Are your clients having some, supply chain issues, or are they needing extra cash in order to manage their business that way?
Yeah, we see it in two different ways. I think you pointed out one of the more obvious ways I think that's really being impacted is there are shortages. They don't have them, so they're having to do a lot of different things. One, their pricing might be more because they're having to find vendors or suppliers they don't usually use. We have an electrical contractor that does a lot of work for putting in pools, and they have a little box that goes on part of the outside that's usually $2, but they can't find one. And their suppliers out, and they had to call around to 30 different Home Depots to buy up all the stock, and they had to buy 400 of them to fill their part levels, and they got 400 of them, but it cost them $10 a box. Now, fortunately, it's only a $2 item going to $10, so it's not a drastic impact to their margin. But you know what? When you pay 5 times more for a certain product, if that's not a $2 product and that happened to be a $100 product, it's going to be real impact. So things like that, plus how much longer.
I'm pretty sure it took some person a lot of time to call 90 different Home Depots trying to get stuff. So, that affects your cash flow as well. This person is now working more time, possibly overtime, not being productive because he's too busy calling Home Depot,
And they're frustrated. Yeah, and that's exactly where I was going next. It could be like, how efficient are they with their time now? Because you're having to juggle things and stress levels and all that stuff matters. It's real, and it definitely does matter. The other side of it is freight, the freight associated with it. We have customers that are trying to ship things, and containers cost $20,000 and they used to cost $2,000. Well, that's a problem. But what's a bigger problem? They have $20,000 in their hand and they still can't find a container. So that's a real issue. There's customers that have finished goods in China or in other places that, it's just the product doesn't cost enough. The increase in price from $2,000 to $20,000 for a container, what they're filling that container with, there is not enough margin to justify that extra $18,000 in cost. And that's just real. That's just real. So they're going to leave the product there till next year, and bring it over. So there's different things like that that are impacting it. The other is if you do buy things in bulk and you can do that, that takes a lot of cash. Or if you need to just try to you need the product, so you used to paying it in 30 or 45 days, which means maybe you deliver it to your customer and you're already paid by then. So therefore you can order your raw materials on credit and pay for it when you're paid. That means you have no cash it's not a negative cash burn to your scenario, and it doesn't cost you anything. Well, all of a sudden, if you now have to borrow money to buy that material in advance, you not only need 45 days worth of cash that you didn't have before, but there's also a cost associated with that cash, which is both impacting your cash flow and your margin. So those are the other metrics we look at and see.
Yeah, that's important too, the cost of leveraging. So speaking of all of this, have you had any specific manufacturers that you've been able to help from a cash flow standpoint? Do you have any stories to tell? Love stories.
Yeah, there's a great story. We have a manufacturer who sells things to the Department of Defense. They sell to, they have a really cool film that they've created, and it basically is a heated material that they can put into flooring, they can put it onto sidewalks, they can put it into the Department of Defense uses it for a lot of different items. Some are classified. It's really cool business because they're used, again, to heat floors in homes, all the way to the Department of Defense is using it for certain things that I don't even know. But what's cool about it is in order for them to bring in materials, they bring them in giant rolls. And when they can buy something in a giant roll, it costs them per unit like 65% less than it does if they bought it just in time, or if they had to order it in smaller quantities. So the ability of them to have cash up front to actually buy them in bulk, and knowing their revenue cycle, yes, they have a cost associated to the financing, but they're being able to, their unit cost goes down by 35% because they're able to buy things in bulk. And the net effect ends up being 30 or 28% difference. And so in savings, so even though they're borrowing money and it has a cost, they're buying in bulk, so they're more efficient. The other thing it does is it allows them to have minimal waste. They went from being able to cut they went from being able to take units in where they needed a little bit of slack on each side to now having a big roll that they can cut as efficiently as possible. So not only that, but they're able to get more out of the same linear foot. So that increases their revenue because they basically save all of that cost associated to the waste. So that's a really cool story. They're also able to use cash to be able to bring things over, buy things when they need it. And for them in particular during COVID, they've been able to jump the line and get in front of people by having the cash to pay for it right now.
Cash talks, right?
That's right. Yeah, definitely.
So, you know, speaking, I'm sorry, go ahead.
So that was one story. I can think of a few more. There's one in the food service business too. You know, this is an easy one. If you're in the manufacturing field or fabrication or just food processing even, which is a form of manufacturing, I think this particular company happened to be making salad dressing, and they had 2 or 3 different big retailers they sold into. And you're talking about a $20 million business here, grew fast to 20 million. And all of a sudden, Sam's Club wanted to put all of their stuff in. And it's that great day in history where you get the big giant order or the big orders, and you're thinking, oh my gosh, what am I going to do now? I don't have the money to. Every $1 million that I'm going to deliver here costs me $500,000, and I have $150,000 on average in my account. What am I going to do? And so we're able to provide them a loan structure that allows them to buy those $500,000 worth of raw materials, pay for the labor associated to it, and then every 21 days, they could turn that into $1 million invoice. And so it gave them the ability to basically scale their business from 20 million to $35 million with that one huge customer.
Yeah, that's a great example.
After those customers.
Yeah, that's like I think a perfect example of what you do is being able to get the cash quickly to leverage, and I love that. So, we've been talking a lot about raising costs of freight and raising costs of product, meaning increasing, like these, freight has gone up and labor has gone up and parts have gone up and, searching for Home Depots, all these increases in expenses. Are you at all talking to your clients about increasing their prices to adapt to these increases in their expenses, or how are your clients addressing this?
So the short answer is yes. I think in general, if I were to go prior to this particular time period, having a business that your margin is X, and you say, therefore, that's not enough. I want to have my margin is 15%. I was told by my accountant I should have a 30% margin. So I'm going to raise my price to get that 30% margin. And then all of a sudden they're like, well, I'm not getting any orders anymore because my pricing's too high. That is not a good reason to increase your prices. If you're running an efficient business and you're doing things in a good way and you're not being wasteful, now considering that, now going into your customer and asking for a price increase because your costs are truly higher is a great time to be able to do that. And I'll give you an example. Most customers we speak to, if you suggest price increases or they were to suggest price increases to their customers, they would immediately be nervous or scared that they're going to it opens the door for their customer to go find business from somewhere else. Mm-hmm. And I would tend to agree. As a matter of fact, if someone increased prices on me and I was on the fence about shopping around, I probably would shop around. But the truth is, remember my caveat, you're already running a good business, you're going at them because you have an efficient business and you're running a good model and you're delivering a good service. You go to customers now with a price increase, it's justified. I mean, again, containers, 2,000 to 20,000. People know that. Labor shortages, overtime associated with that. People know that. Your customers know that. They're going through the same things. So don't be scared to ask for a proper price increase. Can you go make up all your margin at the expense of their margin? Maybe not. But you know what? You should have an honest conversation with it. Go in and let them know, hey, look, my labor rates are now, because of overtime, I used to spend X amount of dollars on overtime, and now I'm spending this much percent over. I used to pay $2,000 for a container, now I'm spending 20. My freight costs were X, and now it's Y because there's a trucking shortage. you know, I have to pay more to have people stay here than I used to. There's government constraints. I'm paying back loans. I've borrowed money. I mean, you can share with your business. People like to know the truth. What they don't want to know
Transparency.
is you're asking for a price increase because they think you're gouging them in the marketplace. But if you explain why and you explain what your justification behind it is, we're encouraging customers to look at that. And if justified, go for it. The story I'll tell is, you know, most people would think Home Depot, if you were to go to Home Depot and ask them for a price increase, they would, you know, basically tell you no way, and then immediately shop you out, stop giving you orders, and show you that how powerful they are. Well, we have a customer who's gone to Home Depot recently, and Home Depot is accepting an 8.5% price increase, which is huge. And yeah, and they're going to pass that on to the consumers in the aisle and whatnot. Home Depot is going to be okay. But the reality is that's not their business model. Their business model isn't to take price increases and pass them on to the consumer. They realize and they understand that these are real times and there's real issues there, and it's important to just think it through. But you know, that customer of ours was very transparent. They had their numbers out. They didn't say, here's my margins, so to speak, but they did show the difference in between what by percentage what they were paying before, and they were certainly items that were relatable to what's going on in the world that they could justify.
So you mentioned a couple things there. You kept saying if, right? So if the company is already doing everything right, if they're lean, if they're managing their business appropriately, if, I heard that a lot. So what if you're that customer or client that isn't really doing everything right and possibly has some waste? And so how do you help your clients identify where they may have waste? In, you know, spirit of our theme for the month of lean thinking, you know, how do you help them reduce waste if they can't say, hey, I am running a good business, I want to go back and increase my prices here? What if they're with that client that says, I can't really say that?
Yeah. Well, I would take it back. The first thing I would do is I would say, look at what your revenue cycle is. You know, one, you got to be able to understand what your baseline is. How much cash does it take to run your operation the way it is from start to finish? And sometimes that can be really overwhelming when you look at your whole business. So maybe look at it by customer. Maybe look at it by order, you know, depending on what your business is. You know, by customer is a great way to look at it. You can all of a sudden quickly realize, and we have this happen all the time, you may have a customer that you do. Let's just say you're a $5 million business and you have 5 customers, okay? And your overall business makes 20%. So you make $1 million a year. You might look at your revenue by customer and your revenue cycle by customer and realize that your 4 customers are at 30% and 1 customer you're losing money on. So the quickest thing I would tell you to do is become a $4 million business making $1.3 million, than be a $5 million business making $1 million or more, whatever the math is on that. And so really understanding it by customer or by your revenue cycle will help you identify that. So let's just assume you already have those numbers and you've done that well. Okay, well now things have changed a lot in the last year or two. COVID certainly drove a lot of that. Some of it has been driven just by natural cycles in business. And if you're still running the same plays and the same offense, the same way you did before, and just doing it and doing it and doing it and doing it and doing it over and over, and you haven't made any adjustments, well, then I would say you probably need to adjust some things yourself before you go to your customer and ask them for a price increase. That's one way. And then lastly, the last and final thing I would say is, have you done anything different inside your organization to make your current team and current structure more efficient? Maybe it's a new incentive plan. Maybe you've revamped how you compensate your employees. I'm not saying just give everybody a raise. What I'm saying is maybe you create, you know, the most simplistic way is maybe you used to pay by the hour and now you pay a piece rate, or maybe you pay a lower hourly rate but a significant bonus for production. I mean, there's just a lot of ways you can drive that, but you need that baseline of information first to see where and understand where the metrics are to drive value or cost or savings in that matter in your revenue cycle. And then give yourself some credit. You're going to know your business better than anyone else. And if someone gave you all the information, you would know what levers to pull. So if you don't know how to get that information, hire the right professional services to do that. Your attorneys and your accountants, of course, from a financial perspective, can show you what things you need to know. They can give you metrics off of similar businesses, similar size, That's what good value is. They're not just there to do your taxes.
That's right. Preach, Scott.
It's true.
So you
Your
beat up
accountant should
revenues.
be able to make money on whatever you pay your accountant. If you pay your accountant X, you should probably be able to get back 2 or 3 or 4X if you're doing what you're supposed to be doing with that investment. It's
If
just
you take the advice, right?
it's just
That's,
a fact. Yeah, those are
that's the
all.
hard part. So you beat up revenue cycle a lot today. So if you're a person listening and you don't really know what that means, we've talked about it a lot today. So hopefully you're walking away knowing what that means. But what would be, Scott, your advice to say, hey, if you don't know what your revenue cycle is, how do you get started knowing that? Like, where do you start if you're just new to this?
I'd take one customer, let's make it real simple. Take your biggest customer, take the average order you get from them, one order, and go back and look exactly what your costs were and what your labor was and the time frame in which you incurred it. So if you have one order for X amount of dollars, when did you order the product for that? Did it come right out of your inventory? Did you have to order extra inventory? How much time did it take to put that order together? How many people? What was the labor rate? Figure it out for just one single PO for one single customer and see what you learn. That's what I would do first.
Gotcha. That's a great place to start. And then hopefully you can expand on that and make that company wide. So there's a lot of opportunities right now out there for extra cash. In addition to obviously what you do, there's ERC, there's PPP, there's EIDL. I know you guys are sick of the acronyms because so are we. But those are some of the most popular, I guess, of the opportunities right now out there. How are your clients capitalizing, or are they capitalizing, and has it affected your business at all? Are you seeing less demand for your services right now because of an influx of these stimulus funds, or how has that affected you?
No, that's a great question. There's a lot of programs out there, and that's what you're getting at. So I would back up to one thing. We have a set of core values at Mobilization Funding. One of them is to be humble. And part of being humble is to know you don't know everything, and be a lifetime learner is one of the characteristics of being underneath being humble. So spend the time and energy each day to educate yourself, whether it's either reading the paper, reading a book, finding out what's going on, looking at the different webinars that are out, or whether it's, and obviously people on here are obviously watching webinars, so I congratulate you all, but also read the blogs, find a source of information that you like, and commit to getting it each day so that you are aware of these opportunities. For example, the government had the PPP loans, they had the EIDL loans, and I think a lot of people understood EIDL and a lot of people understood the PPP loans, but that lasted for a year. Well, all of a sudden they came out with the ERC loans, which is the employee basically earned credit. Basically, get it, if you meet certain metrics, you can get your payroll taxes paid back to you for certain time periods. Well, I would tell you that if 100% of people knew about the PPP loan, I would say 15% knew about the earned credit. And that's something that you either just didn't pay attention to, stopped looking in your same circles. If you're only getting your information from the Today Show or from Fox News or from whatever channel you like to watch.
What? They don't give good, solid tax advice?
Yeah, they probably didn't bring it up. So, find it from somewhere else. But that's real money. We have businesses that are getting, think about what you pay in employee taxes, the company-sponsored employee, the company portion of the employee payroll taxes. Think about what you spend on a quarterly basis and imagine getting 100% of that back for 1 quarter, 2 quarters, 3 quarters, and what that could do for your business. That's what that is. And most people are probably eligible for that, and the great majority don't even know about it. That's the reality for that particular item. Or the EIDL moved from $150,000 to $500,000, and then it moved again from 500 to 2 million. So those are some opportunities there of things that you are aware of, maybe or maybe not. The other end, did it impact our business? Absolutely. When the government gave out 2 rounds of PPP money, which is free money that you don't have to pay back, we encourage our customers, go get it, because if you're eligible for it, you should get it and you should use it the way it's properly used. So what we did was we built a series of educational tools and webinars to show them how to apply. We brought folks on like yourself, Suzanne, to talk about it and what they can do, how to prepare for it, what to put together, how to make sure you get the right things so you do get it forgiven, so that it actually is forgiven. So those are the things that I would suggest doing, because there are a lot of programs out there, and that's just the federal programs. There's state programs, there's county grants, there's things inside your city that you can get. And just spending that extra time each day, even if it's 10 minutes or 15 minutes, where you commit to yourself that you are going to educate yourself on what's going on out there for you and your business, it will be a great investment in yourself and your time and what you know for what will be out there. These are the types of things that you'll learn and be able to take advantage of.
Yeah, shameless plug also for both of us, really. You know, surround yourself with professionals that also are up to speed on these things as well, because, you know, you want to be able to go to your circle of influence and say, hey, you know, I heard about this, but I don't really know anything about it. Can you help me? Can you tell me more? Am I qualified? You know, so surround yourself with attorneys and CPAs and lending people that can, you know, help you understand and navigate all of the changes that are happening right now in the world that we're in. So I'll just add that to that. So you mentioned, go ahead.
I was gonna say, we had a customer gave me the best compliment. He's like, Scott, I don't need you guys for money anymore, but it's so much better for me to work through these cash flows with you guys and understand how to efficiently use it. And then I can drive the value now, having this money available to me for these projects, that I'm gonna continue to use the load program for that purpose. And like I said in the beginning, our real value is the cash flow tool and the understanding of it. And we just administer that tool through a loan program.
Right,
But it's
right.
the same thing. Yeah.
So just maybe one or two more questions here, looking at time. You mentioned transparency a few times, and I think that's really important, both internally in your organization and externally with your, you know, the people that you're working with, your vendors, your suppliers, your business partners, you know, just talking openly about, you know, the market and where you're at and what you need to do business. And obviously that makes you vulnerable, and you have to be pretty confident in that the service you're providing or the product that you're selling is, you know, solid, and you feel confident about that. But can you talk a little bit more about that? Like any examples or situations where that has, you know, worked out well for someone or perhaps didn't? Any transparency type of comments here?
Yeah, it's funny. You know, generally speaking, what you're talking about is like, I call it like coming from a place of abundance versus scarcity, you know. And if you're going into things scared, like, oh, I'm afraid I'm going to sound stupid, or this is something that I think I should know, so therefore you assume you should know it, which means you assume that everybody else does, and then you make a series of decisions based on those assumptions, and the only person you end up hurting is yourself. So like if so, and I'll give you the easiest example is people all the time, whenever I'm talking to them, they use an acronym. They say ERC or they say EIDL. And because someone's using it that you're talking to, the general assumption in someone's mind is you're supposed to know what that is, and you don't, so then you feel stupid. Well, I can tell you that if I don't know what an acronym is, I ask every single time immediately, what is it?
Me too. I'm like, wait a minute.
And I can tell you, like 95% of the time, I'm not supposed to know it. I never heard it before. It wasn't something dumb. And the other 5% that is something dumb that I realized I should have, who cares? It actually ends up being more of a benefit to me, because it was kind of a cool icebreaker reminder. I was like, oh yeah, I do know what that is. Sorry.
And you just show you're human, right? You know?
Right. Exactly. So, you know what you know, and you know what you don't. So if you're really worried about what you don't know, spend that 15 minutes a day educating yourself, be humble enough to do that, and then you come from a place of abundance when you're talking to everyone else. So go in when I say like go in with the transparency to lay something out. That's what's important. In our construction business, or for our clients that are in construction, for example, there's projects where they have a contract and then something different comes up or something new, and it's called a change order, which means changing something about it, and they have to reprice it. Well, there's always this battle and debate between the customer and our client as to what price they should put on it. Their customer thinks they're going to charge too much. Our customer doesn't think they're charging enough. And the reality is, if they just are, if they're very transparent about what the costs are, where they're being driven from, why the value is there, and they, instead of trying to hide it, like, oh, I don't want to show them my costs, or I don't want them to my supplier, then it makes it a lot harder. So that's one example. You know, for those in manufacturing, I think a great example is just like we talked about with the price increase. You know your data, know your numbers. Let somebody walk. Don't just tell somebody you want a 5% price increase. Walk them through your logic, and then tell them that basically accounts for a 5% price increase. Can you help me? How can you help me solve this problem? Here's my problem. These are my cost increases. This is what I'm trying to do. You are a super valuable customer to me. How can you help me fix this problem? They might even suggest to you when you walk through that let's increase the price a little bit. Maybe you don't get exactly what you want. So that's, just be confident enough to come to come from a place of abundance and be transparent, and don't worry about it. And you know, if you say, oh, it's easy to say, yeah, it is. If you spend the time on yourself to educate yourself like you're doing right now, to have this information, to know how to use it, to spend the energy and time arming yourself with the data so that you can be transparent. Don't just wing it.
So not only, guys, are you getting good cash flow advice here, you're also getting emotional intelligence advice. So that's just on the side bonus for y'all that joined in today. Yeah. So I know Nancy has anything else, Scott? I know she has some wrap up comments here, but that was the majority of my questions for you. We're got a couple minutes left. To your point, the 45-minute, 15-minute off productivity, we're going to give you a few minutes back in your day, unless Scott, you wanted to add anything else to the presentation here.
No, that was it for me. I just appreciate
we covered
time and energy. I think it's really cool that you're doing this stuff for your clients and your network, and it's certainly important. I've learned, everything I've learned has come from either asking lots of questions or joining my own networks or working for the groups that I work with in professional services and sharing the information. So I'm just happy to be able to do the same.
One of our favorite fundamentals here at Saltmarsh is to be a lifelong learner and be very curious. Ask a lot of questions. It's okay to be vulnerable. It's okay to not know the answer to everything. The way you're going to learn is by asking questions. And nobody I've ever met in life has ever judged me for asking a dumb question. Usually they're very happy and helpful and want to help you learn. So I think that's a great closing point there. Nancy, I know you've got a final closing comments for us.
Yes, thank you, Suzanne, and thank you, Scott, for joining us for Manufacturing Month. To the audience, as mentioned before, today's webinar was recorded, and you'll receive a link to that recording along with additional materials, including that cash flow tracker and instructions that were mentioned. On your screen, you can see some contact information for our speakers. Reach out to them if you have any questions or just want to chat some more. And next on your screen, we hope you can join us next Wednesday for our Women in Manufacturing panel. We have an amazing lineup of panelists. So head over to saltmarshcpa.com/seminars to register. And if you're in the Tampa or Pensacola areas, we'd love for you to join us for a happy hour at the end of the month to cap off Manufacturing Month. Just reach out to me or another member of the Saltmarsh team to RSVP. And upon exiting the webinar today, please complete that short survey so we can get your feedback and list any other topics that you'd like us to cover or talk about. And with that, we're going to end a little early, and we hope you guys have a great rest of your day. Thank you, guys.
Thank you. Bye.
See you later.